All right, so here we are. I promised we would do an update on the dailies. This is going to take us up from January of this year up until the end of October. And right now we are sitting at, this is after commissions, 1335. All right, so that is after commissions. And that is with the assumption that you are trading all the patterns for all the different pairs. Now, if we want to break it down, all of this is available on the website. You can download this spreadsheet and you can look at every single pair. Not only every single pair with every single pattern, but I do have them also broken down as well for each one of the patterns. So we have the HF pattern, HF2, HF3, and the DP. The HF and the DP continue to be, I'd say, the most consistent out of everything. But once again, if you want that diversity, trade them all. Still $1,300 at the end of the year, or almost at the end of the year, is not bad, considering that this is a set and forget. Okay, this is not, you're not trading dailies to try to make a living at it. Okay, if you want to make a living out of trading, you got to be a short-term trader. You really got to be a day trader, or you got to have the account size to put a lot of size on if you're going to be doing any kind of overnight trading or trading these dailies. But the other thing, too, is this is really geared towards those that just pretty much want to put a trade on and let it go and forget it. Okay, so the returns, when you look at it, say with $1,300, trading every single one of these patterns with every single one of these pairs that I have listed here, you could get away with $1,000 account size. If you're trading just two of the patterns, two that you like, you can get away with trading a $500 account. Okay, so obviously it's depending on how much you put into it. It gives you a lot more flexibility, right, to adjust size if you want to adjust size. But at the same time, considering the type of return that you can get, that's a pretty good return, saying that you started the year with $1,000 and now you're at $1,300. You've already done over 100%. Now remember, the other thing is when we look at these kind of numbers, remember, this is day trade, this is day trading, this is overnight trading, this is putting a trade on the night before and letting it just expire the following day, or letting it, let the contract expire the following day. This is very similar to what you would expect on a mutual fund. So you kind of have to compare this to, investing in some sort of mutual fund, because you don't look at the mutual fund on a day-by-day basis. You look at your percentage return at the end of the year. And that's what I want to stress. So if you're looking at this thinking and this is all on a one contract basis, if you're thinking that $1,300 is not a lot of money, then you're really missing the point of what these dailies are all about. All right, so this is nice because you can start it with a small account, set it and forget it. It doesn't take a whole lot to put these trades on, and for the last 3 years, they've been pretty reliable. So if we come down over here, once again, we look at 2020, 2021, and now still in 2022 with a few more months left, you can see that we've had a lot of consistency with HF. Not so much with HF2, but HF3 has not been too bad either. And HF3 is starting to come back as we head in towards the end of the year. And of course, DP, I wasn't tracking DP or trading it back in 2020, but I started trading in 2021 and 2022. So the two strongest obviously are HF and DP. But if you want to be a little bit more diverse, you could, you can trade all of them, or you can just trade some of them. That's going to be certainly up to you. But also in this spreadsheet, once again, that is downloadable. If you like, just go to my website, Innovator Trading Strategies, and you'll see a link there. We can take a look at not only last year, but also this year as well. And you'll be able to download it. So if you want to look at those numbers a little bit closer, you can certainly do your own analysis. But you can see I have each one of the pairs broken down per pattern. So here's the Aussie Yen for the HF, and then we have the Aussie Yen for HF2, HF3, and then the DP. And then we go to the Aussie and we do the same thing. So every single one of them, each pattern is broken down for each one of the different markets that you want to or may want to trade. All right, so all broken down. There's plenty here to look at. So What I don't recommend is I don't recommend saying, okay, it looks like the pound yen has been the best to trade over the last year or two, so I'm just going to stick with the pound yen because it just doesn't work that way, all right? Because the pound yen may be great this year, but it may be weak next year. Maybe the euro US is strong next year. So I wouldn't start picking picking at which ones are profitable and which ones are profitable. I think as a whole, they work out very well because it's very hard to say that the pound yen is going to be profitable next year. So, after doing this for 40 years, I can tell you that things just don't work that way. All right. Every market tends to have periods when they're very good, they're very strong, and then there's periods when they're not very good. And that's not only for the way that I trade, but for a lot of different approaches to trading. Every approach is going to have its strong periods and is also going to have its weak periods. All right. So that's it. That's where we stand. Once again, are we in line with what we'd expect? Yeah. I mean, let's come back over here one more time. Looking head fakes in 2020 did 937, then we did 1528, now we're 1103. We're right in line with what we'd expect. All right, so this month we are going through a drawdown. That is one of the things I wanted to show you guys because I think it's really a good idea to kind of see what to expect. But if we come all the way up here to the first of the year, let's look at the end of this month. You can see the end of this month, you traded all month, you're down $151. Most people at this point would probably have given up a long time ago because they don't believe in they don't believe in the patterns, and unless you understand how these patterns work, which I recommend that you do, so you have faith and trade in it. That's real important. But you can see most people would have given up. Okay, so you're coming into February, same thing. So now you're down 228, right? So come down a little bit. And now we're down 28. So you see now we're starting to come up. This is a cumulative number, all right? This is not how much you did for that particular month. This is a cumulative. You can see it's a cumulative number. Okay, so that means right now your account would be down 28 from January 1st. All right? Go on to the next month. Man, we have a really nice month, $462. Now we're up $462. So you're up 46% if you started with a $1,000 account and you're sitting at the end of April. All right, that's pretty impressive. And then you go into the next month and things start to get stronger. You hit $1,400, $1,000, run there on the month. Very nice. Now we're sitting at over 140%, right? So you can see how it's starting to grow. And of course it goes up and it can go, see it went down 1137, you stick with it, you come up to 12, and then all of a sudden you're back down at 1119, just kind of going flat, 1193, and then bam, you're up to 1797. Okay, so the idea is that you just kind of want to stick with it. It's gonna go up and it's gonna go down. You go with the flows, but when you hit a strong period, that's when you start to see the count really grow. And then it goes flat and you have your pullbacks just like you would even on a price chart, right? Prices don't go straight up and straight down. They fluctuate. It's going to be the same thing with this approach as well. So anyway, that's it. We'll do it again at the end of November. And then, of course, we'll have our annual review to see how these have done at the end of the year. But if you have any questions, best way to get a hold of me is through my website, innovatortradingstrategies.com. Once again, you can go and download these and take a look at them yourself. It is available, and this is all in Excel spreadsheet. So if you use it or have Excel, you can download it and you can play and look at these numbers and do whatever kind of analysis you want to do on them. But once again, I recommend that you stick either with all of them or stick with just a couple of them, but be consistent, right? Don't just because you had a loss doesn't mean you stop trading. It's one of those things where you just have to keep going at it. And once again, there's no guarantees. There's no guarantees for anything in life. But we as traders, hopefully we believe in what we're doing. And because I do understand how this works, I know it's going to hold up as I go, longer and longer and longer out into the future. And that's been the case. But also that confidence allows me to continue to trade it, even though we've had several drawdowns over here. Now, of course, these are not all in the same pattern, but you can see that's, pretty rough go there, right? For those trades right in there. And then on the 30th, you had several more all setting up, and you had several. But, that's just, if you can't go through this kind of action, then you shouldn't be trading, because it will, not only has it happened, but it will happen again in the future. But at the same time, overall, because of the way this is designed, I'm confident that this is going to continue to grow as I move further and further into the future. So that's it. Once again, any questions? InnovativeTradingStrategies.com. And that's it until the end of November. Take care.